make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on. Call in now. 855-4-SCHIFF. That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff here at SchiffRadio.com. We're taking your calls. The number is working today, 855-4-SCHIFF, 855-4-SCHIFF, if you want to be part of today's program. Well, we're off to a pretty volatile start here in the markets. The Dow Jones is down about 110 points. Pretty much every day it seems like we're starting off with 100 to 150 point swings. The big news, though, is going on in the gold market and the Treasury market. I think in response to a comment made this morning on CNBC by the president of Chicago Federal Reserve Bank, Charles Evans, who's also a voting member of the FOMC, he told CNBC that he was in favor, basically, of quantitative easing 3, QE3, and that got the market thinking about more money printing and more Treasury buying by the Fed, and as a result, Treasury prices are rising. You're seeing a pretty big drop in yields and a big increase in the price of Treasuries 10-year and 30-year. Now, why is that? Well, because if the government is going to buy something, when the government buys it, that means the price goes up because they're in there buying. But the problem is, where does the Fed get the money to buy the Treasuries? Well, it creates it out of thin air. It prints it. And so when the Federal Reserve creates money to buy Treasuries, it devalues money. Now, Treasuries are simply obligations to pay dollars in the future, but by printing dollars to buy Treasuries, the Fed makes dollars less valuable. So by definition, Treasuries become less valuable when the Fed prints money to buy them. Now, in the short run, the price may go up because of the trading mechanisms of the Fed coming in and bidding up prices. But by printing money to bid up those prices, it ultimately means that the Treasuries that they're buying are worth a lot less because the interest payments and the principal payments will buy less in terms of everything you want to buy. Certainly in terms of gold, the price of gold is surging today by about $40 an ounce based on these comments. So obviously, Treasuries, dollars, will buy a lot less gold now that this announcement has come out. And, of course, over time, the number of ounces you'll be able to buy for your dollars will continue to diminish. Now, against other currencies, the dollar is not really falling today. It's down a bit against the Australian dollar and the New Zealand dollar, but it's up against other currencies, mainly the European currencies. The euro, they got weak economic data. They got consumer confidence numbers out of the Eurozone today that were the lowest since December of 2008. And you remember what was going on at that time. And so, the market is it's almost schizophrenic between who do we want to worry about, Europe or the U.S. Obviously, there are concerns on both sides of the Atlantic, but by far, the more immediate, the more severe problems, I believe, are in the United States rather than Europe. And I think the market is missing the mark when it pays too much attention to Europe at the expense of the dollar. But obviously, gold going up shows that there are problems with both currencies. But printing money to buy bonds is decisively negative for bonds, because the worst thing that can happen to a bond holder is inflation, is that the value of their bonds in real purchasing power is diminished, and that is what is happening. Now, oil prices are up. We're up back at about $88 a barrel, so oil prices are responding to the fear of more money printing. But in general, a lot of commodity prices are still, well, the CRB is up a bit, but I think what we need to see, and we will see, is a lot of the industrial or economically sensitive commodities that are being dragged down as people are worried about global recession, at some point the inflationary forces will overwhelm the deflationary forces of slower economies, and you will see across-the-board increases in prices as a result of Fed money printing and the promises of additional Fed money printing. And I've been saying for a long time now that QE3 was coming, even when others said that there was no way it was going to come. In fact, I remember one time on CNBC, Steve Leisman was on, and someone tried to bet him that there would be a QE3, and Steve Leisman said it's impossible, and he offered him 5-to-1 odds, and I immediately emailed Steve Leisman to put me down for $10,000 on that bet. He's trying to weasel his way out of it now, but anyway, that I took him up on the bet. The other guy was only willing to bet him a lunch. I had a lot more confidence. In fact, I said I would be willing to up the bet if he wanted to, but I figured as a reporter he didn't have that much money, and I figured maybe $50,000 was all the guy could afford to lose on a 5-to-1 on $10,000. But I was confident that it would in fact happen, and I think what the Fed president said is one of the reasons that this next FOMC meeting has been lengthened by a couple of days, and Ben Bernanke himself mentioned that the meeting was going to be longer at his Jackson Hole speech, is that they're going to obviously be discussing more aggressive monetary policy, and in particularly how they could do QE3. Now, will they actually label it a QE3? I don't know. I've been saying that I think they might come up with another name because, of course, QE3 really means inflation. That's really what they mean when they say quantitative easing. They mean create inflation. So the Fed can come up with some other euphemism for inflation, because they don't like to call it what it is, because if they say our policy is to create inflation, some people might think, but why? I don't want inflation. Prices are already too high. I don't want higher prices. So when the Fed creates inflation, they don't want to call it inflation because it doesn't have a positive connotation. But quantitative easing, somehow that sounds like, well, that must be pretty good. I mean, that sounds really fancy. These guys must know what they're doing. This is, quantitative. I mean, that sounds like, really sophisticated kind of thing. And easy, well, hey, that's good. I mean, we'd rather have things easy than difficult, right? So quantitative easing kind of sounds like it's a good thing, but it's a bad thing. And if you want to know why the cost of living is going up, it's because of quantitative easing. Why things are more expensive? Well, quantitative easing. And, of course, there's been so much quantitative easing, even before they officially came up with that term, that, all the GDP growth, I think, of the last several years has been manufactured because the economy is really contracting, but when the government tries to take nominal GDP and deflate it to make it real, they're using a deflator that doesn't even come close to capturing the true extent of the money printing of the inflation or quantitative easing that's going on. And, before I forget, too, I got another email in my inbox today, again, with a lot of my words being parroted back to me by that criminal organization known as the National Inflation Association. And what's really insulting to me is in the email today, they're trying, again, they're claiming credit for a lot of the forecasts that they made that have come true. And then they say that most of our forecasts are unique to us. None of their forecasts are unique to them. All of their forecasts come from me. They simply look at what I'm saying, and they just copy it. So if I forecast something, they forecast it. Of course, they're not forecasting anything. They're just repeating what I've already said. And then, of course, since a lot of the things that I've said have happened, they claim credit for these, and then they use that credibility to con people into their penny stock pump and dumps. So, they end every one of their emails by saying it's important to spread the word about the NIA. That's the one thing they're right. It's important to spread the word that this organization is a scam, that they're a front for penny stock promoters and illegal pump and dump schemes, and anybody who is a member of this organization should drop out of it and spread the word to anyone else that that if you are a member, you should unsubscribe and stay away from any stocks that these guys recommend. Anyway, don't go away. We got a lot more coming up here on the Peter Schiff Show on SchiffRadio.com, the gold standard in talk radio.
The Peter Schiff Show.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
And we are back. This is Peter Schiff here at SchiffRadio.com. And, we got some economic news this morning on housing. We got home prices that came out for June. The year-on-year decline in the 20-city Case-Shiller Index was 4.5%. Now, I guess if you want to try to make lemonade out of these lemons, you can go back to the month prior where the year-on-year decline was something like 6%, which was the biggest decline year-over-year in several years. I think it was 5.9% was the June number or the May number. But the numbers are still very weak. And you know what? They're going to get a lot weaker. Even Washington, D.C., in this most recent month declined. I mean, all 20 of the Case-Shiller cities in the index declined, including Washington, D.C., although Washington, D.C. had the smallest decline of any city. The largest decline, I think, was at, where was that, Detroit or someplace? There wasn't Detroit. I'm trying to find where it was. But there was one city that was down 12%. Minneapolis, or 11% drop in Minneapolis. Not sure why the Twin City, or at least one of the Twin Cities, was so particularly weak, but that's what happened in Minneapolis. But look, these numbers are going to continue to weaken, especially as more and more of the foreclosed properties actually make it on the markets. I mean, many of the banks have been hesitant and reluctant to foreclose, and I criticized the banks for doing this a year or two ago, because a lot of the banks were hoping that if they just didn't foreclose, that the real estate market would turn around and that they wouldn't lose as much. But instead, they're going to lose more, and I predicted as much. Also, too, I read an article last week on the show that said one of the reasons that a lot of the banks don't want to foreclose is there are a lot of these condominiums out there where if the bank forecloses, then the bank owns it, and they have to start paying the homeowners' fees, the association dues. And so they don't foreclose, and therefore they don't have to pay the dues. But the problem is for the communities, because now no one is paying the dues, because the person who is living there mortgage-free is also not paying his association dues, which is why a lot of these condominium associations are suing the banks, trying to force them to foreclose, because by not foreclosing, they're damaging the other homeowners who now have to pay higher assessments because there's other guys who are living there paying nothing, which shows, again, the moral hazards involved in what the government's doing. Also, want to talk before I grab some phone calls before our guest coming up at the next break. I talked yesterday again about how cheap the gold mining stocks are. Well, yesterday I didn't realize at the time, but there was a takeover in the gold industry. The company being acquired, Northgate Minerals Corporation, which is a stock that I personally own. I've owned it for a long time, and I'm just mentioning it as full disclosure. Again, I'm not making an investment recommendation. In fact, the stock is being taken over now, so there's nothing even to do with respect to the stock. But it's being taken over by a company I've never even heard of, Orico Gold Incorporated. I don't own them. I've never recommended the stock, so I'm not recommending it now. But they're the acquirer of Northgate Minerals. But the interesting part about this deal, and I'm reading this Reuters news story right now, is they're buying Northgate for 14.7 times earnings, right? This is a takeover, and this is the cheapest deal, the cheapest a company has been bought out since 2004. 2004. Gold prices were around $450 an ounce back then, and this is the cheapest takeover. In fact, they're saying that this deal is a 64% discount to the deal with Kinross Gold, which I also owned, which bought out Redback Mining, which I also owned. And so but that stock that was done, and I still own Kinross, again, not recommending it, just I own it. But anyway, this deal is a 64% discount to that deal, even though the price of gold is something like, 30% higher than it was, maybe more, than this last deal was done. And again, what all this is showing is that there's nobody buying these gold stocks. And as long as these stocks are so inexpensive, why should any gold company, a major gold mining company, why should they spend money exploring for gold, looking to develop new gold resources, when all they have to do is go out and buy another company for a steal? And so I think, that argues in favor of buying these gold stocks when I think there's so much opportunity for takeover and consolidation. But it also is bullish for gold itself, because if gold companies are simply taking over each other, then that doesn't increase gold output, right? And so what that means is if gold companies are going to use their resources to buy each other instead of developing new resources, that means the gold supply is not going to grow as fast as it normally would, especially given the big increase in price. Because, of course, higher prices should encourage more exploration and more development, and if certainly certain gold deposits that are uneconomical at one price all of a sudden become economical at a higher price, and so that encourages more production. But we're not going to get that normal increase in gold production that we normally would have, given the fact that gold stocks remain so inexpensive. And it seems to me that it's much easier for companies to buy gold on the stock exchange than to find it the old-fashioned way by prospecting for it. And again, it's the people like Dennis Gartman who said that gold, he thought the gold bubble burst, and he actually called it the biggest bubble in our lifetime in history, which is obviously insane because it's a tiny little speck compared to the stock market bubble or the real estate bubble. And he had some nonsense observation that he made a big deal about, where the gold ETF GLD was more valuable than this stock market ETF, which doesn't even make sense, because who cares about one stock market ETF when you're not even counting all the mutual funds and all the other ways that people own stocks? I mean, stocks dwarf the amount of gold by a proportion that's almost a record. Gold is no. I think gold would have to increase 20-fold or something, or 10-fold to get to its percentage of stocks that we had in 1980. But obviously, it's not a bubble given the complete lack of enthusiasm for gold stocks. I mean, if there was a gold bubble, you would certainly see it in the gold stocks, which is where the speculative activity really flows when it comes to gold. It's not in the metal itself, but in the mining stocks, which is where all the leverage is. But the fact that there's so much skepticism, there's so much fear that you can buy gold stocks now on a takeover cheaper than you could in 2004 when gold prices were in the 400s and hardly anybody even believed that it would go to 500 or 600. I remember back then, I was a lone gold bull. Most people were looking at gold above 400, scratching their heads and wondering when it was going to go back down. And obviously, with all that's happened since 2004, the bursting of the stock market bubble, the massive recession, the quantitative easing, the decline of the dollar, all the things that have happened, you would think that it would be much more expensive to take over a gold stock. Instead, it's less expensive. Anyway, let me try to grab a call or two before the next break. On hold is Mike here in Connecticut. Mike, welcome to the show.
Hey, Peter, how are you? Just wanted to share a quick story with you. I'm a small business owner. My lawyer has always told me never pick up a certified letter, never sign for one. Long story short, I went to the post office the other day, and there was a pink slip in there, and I ignored it. Well, a couple days later, I go to get my mail out of my post office box. The box wasn't open.
Hey, Mike, I kind of lost track of time. I really want to hear your story. Can you hang on for past the guest and be up at the top of the next hour?
Sure.
Okay, fantastic. Yeah, I lost track of the time, but it sounds like a good call, so I want to make sure we get to it. Anyway, coming up next is my guest, who is a money manager, Eric Singer. So stick around. It'll be an interesting interview. You're listening to Peter Schiff on SchiffRadio.com.
Stars light up my life. The stars light up my life.
The Peter Schiff Show.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Radio. The Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff at SchiffRadio.com. Joining me now, I believe, I think my guest is on the line, but no way to tell for sure. But my guest that's joining me now is Eric Singer, and Eric runs a fund. I'm not sure if maybe it's a mutual fund or a hedge fund. I'm not actually sure from my guest package. Congressional Effect Management is his company, and the premise is that the stock market does better when Congress is in recess than when the representatives are in Washington doing their damage. And so he has an investment approach. Again, I'm not giving any investment advice here. I'm just bringing him on as a guest, not advocating that people follow this particular procedure. But it's an interesting premise, so we thought we'd bring him on. Eric, welcome to the show.
Peter, thank you so much for having me.
All right, sure. Thanks for coming on. And again, for the compliance people listening to my show as they do every day, we are not discussing Eric's strategy. We're not endorsing it. We're not recommending it. Who knows? We're just talking about the damage that Congress does to the economy, and one way of measuring that damage is through how it affects stock market performance. But anyway, let me know what you've discovered in your research for this trading strategy and how successful it may have been.
Well, Peter, I'm very happy to discuss it. First of all, just objectively, the data shows that Congress subtracts value as opposed to adds value. If you go back over to 1965, which was a date that I started to look at the data, on days, just looking at the price action, on days that Congress is in session and forgetting about dividends and forgetting transaction costs, the market goes up at an annualized rate of 0.9%. That's less than 1%. On the days that they are in recess or on vacation, the market goes up at an annualized rate of 16.5%, and that's a difference that's observed over 47 years. It looks at over about 12,000 trading days, so it's a very persistent effect. And in fact, over the last 10 years, as government has gotten even bigger, the congressional effect has gotten even bigger based on the data.
Now, do you think is there some other factor that could explain that? I mean, have you looked at other things that these periods could have in common that might suggest that it was something other than whether Congress is in or out of session that may have been responsible or correlated with this huge disparity?
Well, there reasonable people can differ and say, "Oh, you're just taking advantage of seasonality," but I conducted what's called a t-test, which is a very complicated statistical test to see what kind of correlation things have. And the chances of this being a random association are, 10 to the minus 9. I mean, it's well beyond like less than 1 out of a million. There's nothing random about it. And in fact, I was the first to publish on this in the early 90s. And after I did, several finance professors looked at the data. Some of them looked at the data going back to 1897 day by day. Mm-hmm. A dollar invested in 1897 just on days Congress was in session and held for 113 years would have compounded into $2. The same dollar. I mean, it is what it is, Peter. And the same dollar they, held over the last 113 years, but just on out-of-session days. In the study held through the end of 2004, it would have turned into $216. Held through 2010, it would have turned into $312.
Yeah, does that take into account any of the taxes you would have had to pay by constantly having to sell your stocks?
No. It has there are no taxes, no transaction costs. Doesn't take into consideration dividend. It only measures the pure price action. But if you think about it, this is something that you're very sensitive to, and you faced when you had your run for the Senate, which is that when they are focused on an industry, buyers, not all the time, but most of the time, when Congress focuses on an industry, it's usually bad for the stocks of that industry. Yeah. Buyers have to worry about new rules, and sellers sometimes have to sell. Maybe they want to buy a house, maybe a daughter's going to college. So sellers are always selling.
Have you ever tried to narrow your focus by sector to see if it even works to a greater extent on certain sectors than other sectors as far as, which ones might be damaged the most when Congress is in session?
Well, I mean, the obvious answer is that, for industries that are the more heavily regulated industries are more affected. So, for instance, the healthcare sector, you could buy United. You had to pay $55 a share to buy United Health at the end of 2007, and by the time healthcare became the nation's primary legislative focus, at the bottom you could buy United Health for $16 a share. So against that background, for that industry, there were obviously was a greater impact.
I wonder if you've looked at the opposite, like, for example, gold. I mean, does gold do better when Congress is in session versus out of session?
Gold tends to do a bit better when Congress is in session.
Yeah, that's what I would think. Because, recently, when Barron's looked over Ron Paul's investment strategy, they tried to criticize him because he owned a lot of gold and gold stocks, and they were trying to say that, his voting, maybe he was trying to undermine the economy. But it seems to be that it's Congress that's undermining the economy if Congress being in session is bullish for gold.
Well, there's something to that, and basically, I think that the problem is that the national vocabulary, the politicians have captured the national vocabulary with concepts that kind of like the government we need to raise revenues, and when you hear about a value-added tax, they're now talking about a value-added tax. I would view it as a value-subtracted tax here.
Of course. Well, the stupidest thing I mentioned yesterday that the president's economic advisor, or chairman of his council of economic advisors, which I looked it up online, by the way. It started, I wasn't sure yesterday, it started in 1946. So we made it as a nation without any advisors until 1946, and we did very well, thank you, without economists in Washington. But apparently, he doesn't want to start the VAT for another 2 years because he wants an added incentive for people to go out and buy stuff now before the VAT kicks in.
Unbelievable. Well, I mean, I just wish that we had smaller taxes, greater diversity of approaches on things. I think that what's happened now in the economy, when President Obama got up to make his speech on that day when the Dow was down about 350 or 400 points, and then he made his speech. He managed to help prompt the market to sell off another 200, 250 points. And the reason why is on the same time that he's giving a speech about how he's going to try to help jobs, the EPA administrator is saying, and we're going to cut out 8% of the nation's electrical coal capacity. Mm-hmm. So for the stock market listening to that has the sensation of you're both stepping on the gas and the brakes at the same time.
Well, of course, whenever you hear the president talk about creating jobs, anybody that knows anything about economics knows he's talking about government jobs or jobs that we don't need. When the government is behind a job creation, it's diverting resources from other parts of the economy where more productive jobs otherwise would have been created. But instead, those jobs are destroyed or not created so that a government job can be created in its place. But, we don't want jobs for the work. We want jobs for the stuff that are produced by that work. And what government jobs are about is working. And what private sector jobs are about is creating value and raising our standard of living.
Well, I think that's right. I mean, we had a jobs report about a month or two ago where the private sector, I think, increased 150,000 jobs, and the public sector decreased 60,000 jobs. That I actually read that as pretty not great, but not terrible. If we ever found ourselves in a position where we were creating 200,000 or 300,000 private sector jobs and eliminating 100,000 government jobs, a few years of that, and we'd have a pretty nice economy.
Well, that's what we need to do. We need to eliminate a lot of government jobs and replace them with productive jobs. And I also think we need to eliminate a lot of jobs in the bloated government-subsidized sectors such as education and health care and services. And we need to migrate those people into goods production, We need to produce stuff. We can't run $50, $60 billion a month trade deficits in perpetuity. If we're going to consume, we have to produce. And we can't produce if all of our workers are busy in service sector jobs or government jobs. So they have to be migrated to more productive uses. Actually, we got a commercial coming up, so we will pick up this topic after the break. So stick around. You're listening to the Peter Schiff Show on SchiffRadio.com.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff speaking with Eric Singer about the congressional effect on the stock market. You know, Eric, just intuitively wanted to ask you a question that, you would think that, all of the damage that Congress does to the economy with their regulations and subsidies and taxes, that damage remains in effect even when these guys are on vacation. So why would you think that there'd be such a correlation when they're in session or not in session when, the legislation is there regardless?
Well, I think that the market is a discounting mechanism, and if you think of Congress as a bunch of rent seekers, they're busy conducting an auction for who will pay the most to either get the legislation their way or terminate the legislation. So when that auction is at its peak, the market is at the peak of its discounting effect. So yes, over a long period of time, the market looks past all that stuff. But on a day-to-day basis, investors, there's a big emotional element in investing. The many smart people like you and the value guys and Buffett and kind of the pantheon of people that are involved with the market are always searching for ways to get past their emotions and looking at the market. But the market has an emotional reaction when you hear that when you hear that the banks are going to have 240 new regulations that they have to comply with, the mind just kind of boggles. So you get waves of selling when they're in session, and the market discounts what they might do.
Yeah, I mean, you might think that it's just the emotional impact of hearing the bad news, that obviously if you understand that anything that the government does in a positive way, meaning it enacts a piece of legislation that didn't exist, it imposes a penalty or creates a subsidy that didn't exist, any kind of positive action by the government that interacts with the economy or with businesses is going to be negative. And so I guess that when Congress is in session, the bad news comes out and people react to the new bad news by selling, and that when you have an extended period of time where Congress is out of session, maybe you have an extended period of time where there's no new bad news hitting you, and maybe the market just kind of rallies out of relief.
I think that's a big component of it. If there's in healthcare or in Dodd-Frank, when there's a kind of a frenzy of legislative activity and they're arguing over whether or not they're going to have single payer or not, and then finally they come to some kind of compromise. It's 2,000 pages, nobody's read it, but they've passed it. It's 3 a.m. in the morning and they all go home. Well, there's a relief rally often associated with the fact that these guys are just not. They've stopped changing the rules.
Yeah, if we can only change the makeup in Washington, imagine if we can elect Ron Paul as the president and have a like-minded Congress, the effect might work in reverse, because if every time Congress was in session, they were repealing rules and regulations and cutting spending and lowering taxes, you might find that the market does better when they're in session.
Well, I think that I respect that possibility. The people say to me often, "Well, what will you do if we get a perfect Congress and a perfect president?" And I said, well, I'll fall off that bridge when I get to it. But right now, I think that I'm on the other side of that bet, and I think it's a relatively safe bet.
Well,
by the way, Peter, just to make sure that we've hit the compliance highlights, I do have a website, congressionaleffect.com. People can go there and see full performance discussion, compliance with all of the SEC requirements. I urge them to look at that.
Yeah, I'm not trying to give you a hard time. I'm a Series 7 broker, and I get these extra compliance stuff. I'm not even allowed to recommend my own funds. In fact, I can't even discuss my own funds on this show.
I completely understand that, and you're in a position where you want to make sure that you've taken extra effort to give people the accurate and required view, so they can find all that stuff at congressionaleffect.com.
Yeah, I mean, my beef is I don't think any of it should be required. I'd like to get rid of the SEC and FINRA, and I think we should have a free market in ideas and investment opportunities. I think I should be able to discuss any investments I want, and I think my listeners should be able to evaluate those investments on their own terms without the government interposing themselves between me and my audience. And I think, mature adults could make decisions about investments that they want to make without a nanny state trying to hold their hand.
I completely
but
agree.
Unfortunately,
one of the biggest problems that we have in this country right now is the employment situation. For many years I was a banker raising money for small public companies. And the SEC got up every day and made new rules that made it tougher to raise money for small public companies, and they're the ones that are at the core of creating new jobs. Small companies and the guys that want to be small public companies.
I'm convinced, being in the financial industry, and I'm going to talk about this when I testify in front of Congress next month on how they can create jobs. I am convinced that the sole purpose of the SEC and FINRA is to destroy jobs in smaller companies to protect the larger companies from competition. The rules and regulations are simply there to run up my costs to the point where I can't expand, where I can't be efficient, and where I have to downsize and outsource out of the country. And that's what it is. And that's all they do is they make it uneconomical to stay in business. And it's just there to protect the big guys who have totally captured these organizations.
I absolutely agree, and it is such a shame too, because when you had, when you have a really vibrant small company market, small public company market, everybody's thinking, what can I do to get rich, to be honest.
Yeah, and in fact, the regulations are so onerous now that, for years and years we never had account minimums, and now we do. We won't take small accounts anymore because the government has made it uneconomical. I lose money on every small account, so I can't open them anymore, even though I would like to. So it denies the small guy the opportunity to even hear about a lot of these ideas because the government makes it too difficult for me to deal with them. But anyway, hey, thanks for being on the show. Good luck with your fund, and hopefully we'll have you on the show again at some point. Anyway, everybody else, don't go away.
Thank you, Peter.
Yeah, we've got a full hour coming up here on the Peter Schiff Show, the gold standard in talk radio.
Up to the ramping. She's always clamping. Visine at the canteen.
The Peter Schiff Show.
Watch you dance. All right. Turn it up now. All right.
First come, first serve offer and kits off.
You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on.
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
Call in now. 855-4-SHIFT.
That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories,
your freedom.
The Peter Schiff Show.
Welcome back, everybody. Hour 2 of the Peter Schiff Show is underway. We'll be taking your calls, 855-4-SHIFT, 855-4-SCHIFF. Now, one quick observation before I go back to the phones is I'm looking at gold. Gold's up about $40 today. And the Huey index of gold stocks is up a little over 6 points at 599. But here's what I'm looking at. In order for gold to make a new high, gold would have to rally about 4.5%. Now, I believe it's going to do that, but 4.5% is a big move. In order for the gold stock index to make a new record high, it only has to rally about 1.5% from here. Now, I think there's a pretty good chance that the gold stocks could make a new high before the price of gold. Now, why is that significant? I think it's significant because I can't even remember when that happened last. I mean, it's been years. If anybody can remember, maybe they want to call the show. But I think that would be a bullish sign. It would show the psychology is shifting, that the gold stocks were actually leading the bullion for a change and rather being dragged behind the bullion, kicking and screaming. And maybe that can signify a brand new leg of the gold bull market. And I think that would pretty much be very appropriate given, all of the drum beating from the people like Dennis Gartman about the bursting of the bubble, if instead of the bubble bursting, we're actually entering a new, bigger leg of this ongoing bull market that sees more and more mainstream money finally moving in to the gold market, and in particular the mining market, the gold stock market. But anyway, that's just the thought. And if you want to get more information on either gold bullion, I have a bullion company, Euro Pacific Precious Metals, for physical gold. More importantly, right now, I think if you want to look at some of my favorite mining stocks, if you want to find out the risks and whether they're suitable for you, make sure and talk to one of my brokers at Euro Pacific Capital. And find out about some of my favorite mining stocks right now and whether or not they may or may not be suitable for your particular investment strategy or your unique circumstances. Anyway, let me go to the phones because I know I have a guest who wanted to start an interesting story. He started before my last guest, and that's Mike from Connecticut. Mike, thanks for holding on. And
no problem, Peter. I'll just brief you again on. I'm a small business owner. 20 years ago, my lawyer always told me never pick up a certified letter. So about a week ago, I went to my post office box, and I had a couple notices. I had one notice in there for a certified letter. A couple days later, I had another one. Long story short, I went to go to the post office box the other day, and it wouldn't open. So I went up to the counter, and I said to the clerk there, I said, yeah, my box isn't open. He says, oh, yeah. He says, we've been trying to notify you of a certified letter. I said, well, it's not your responsibility to do anything further than that. He says, oh, yeah. He says, I want you to sign for it. I said, look, absolutely not. So he went and got the letter, brought it back, was from the IRS. And I said to him, I said, look, who are you to force this letter upon me? He says, well, that's fine. If you don't want it, I'll just write refused on it. So I basically said, here, give me the pen. I'll show you what to write on it. So I wrote up. Long story short, do you see that as being a strong arm? Who is a postal employee to force a certified letter on me? Isn't that my right, whether I want to pick it up or not?
I would imagine, but I guess you have a P.O. box down there, right?
That's correct. So they locked me out of my box, which basically was forcing me to go to the counter and accept this letter. Now, I'm sure if as a small business owner, if I sent somebody a certified letter, they wouldn't go out of their way to lock somebody out of their box, would they?
I have no idea. I mean, you'd have to obviously test it out, maybe try to send one to yourself and see what happens, or find a friend and see. I don't know. I mean, maybe they thought they were doing you a favor because, maybe they didn't think you noticed it. I don't know. But it does sound pretty suspicious that the post office is, working arm in arm with the IRS to make sure that you pick up that certified letter. But I don't know what would happen if you didn't get it. I mean, I guess they would have to send an agent to your house and personally serve you, or?
Yeah, I mean, you're talking $500. I send in quarterlies for my taxes. Apparently, I was short $500 last year, and it's just ludicrous that they have the power to do that to you. I just don't agree with it. But my next question is this. Have you ever considered ripping up your Series 7 license, letting your brother run the ship there, and so you can really tell us what's really on your mind? I mean, I kind of fear what you don't tell us.
Yeah, they still might find a way because I still have an ownership interest in the company. But yeah, I still have some clients I work with, and I still manage money. And although I don't need the 7 to act as an asset manager, But yeah, I mean, but it's still being a radio personality is still a hobby for me. I don't make any money doing this. It actually costs me money. So I still earn a living as a stockbroker, as a money manager, a financial advisor. So it's a big step to just say I'm going to retire from that, even though, yes, I could still generally draw an income as an owner. But I'm not even sure how much leeway they would give me ultimately, if I'm still promoting a company that I own an interest in, that if I'm in fact the sole shareholder of the broker dealer, and then if the brokerage firm were to post links, so I don't even know if I would be completely out from under their jurisdiction if I gave up the license. But yeah, it is something I think about from time to time, and one of these days I might end up doing it, especially if I can actually get a show, if we can get enough people to listen to the show and it becomes more influential and it's more widely listened to, and if I feel that the Series 7 is really interfering with too much on my First Amendment. But for now, I got to keep it.
Right. And also, the other network you were using for your show had a number you could call in just to listen, not obviously to ask questions. Do you know if this new network has a number?
Oh, I don't know that yet. I mean, so instead of listening online, just listen by calling a telephone number.
That's correct. The GCN network had I don't even know the number. Look, I had a program in my phone to call, and you could just listen to you live for the 2 hours versus the Internet, because I'm on the road. And I know a lot of your guests, based on their calls, used to call in and listen on that line.
Oh, I don't know. Well, yeah, I mean, we'll look into it. If they have a line, we'll announce it, but that might not be the case. I don't know for sure.
Okay, well, I appreciate you taking my call, Peter.
Sure, thanks for calling, and thanks for hanging on there. Let me get my phone calls. Next up is Fred calling from Toronto, Canada. Fred, welcome to the show. Is Fred there? All right, well, let me skip Fred and come back to the United States. Kurt in Arizona. Kurt, are you there?
Yes, Peter, hello.
Yes, you're on the air.
Can you hear me? Oh, yeah. Hey, I'm a fan. I've read a couple of your books, Crash Proof and How Our Economy Grows. I like hard money and the disciplines it forces on politics, and however, I'm struggling with one kind of idea. If America were to end the Fed and return to a gold or a commodity-based money, wouldn't that play right into like the international bankers' hands, considering they own and control the majority of the gold and commodities?
Well, no, I don't think they own a majority of the gold or commodities. I don't think it would play into their hand at all. I think it would take power away from them. The bankers don't want real money. They want to create money out of thin air. They don't want honest money. And it would take the power away from the politicians.
From the politicians. I guess in my mind, I always thought that they've kind of, through the Federal Reserve, I don't know if they've collateralized anything that we own or other countries around the world, but it just seems like they've already collateralized that gold.
No, the Fed owns very little gold. I forget how much the gold has as an asset on its balance sheet. The Treasury owns quite a bit of gold, theoretically. But the bankers, I don't think, own much gold at all. But anyway, hey, thanks for your call. Don't go away. We got a lot more of the Peter Schiff Show coming up, so stick around.
In the midst of fighting militiamen, 1 round, took down 6 of them. He ain't really a killer, though, taking a lot of risks.
The Peter Schiff Show.
He turned around and got
Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff here at SchiffRadio.com. And, earlier this morning I was reading some articles about Governor Rick Perry, candidate for president, some of the things that he had said or written in the past regarding Social Security. And I certainly liked what I was reading and what the governor had said. He had basically compared Social Security to a Ponzi scheme, which, of course, it is. In fact, I think it's worse than a Ponzi scheme because Ponzi schemes are voluntary. I don't have to participate in a Ponzi scheme if I discover it's a Ponzi scheme. But Social Security is actually worse because even if you figure out it's a Ponzi scheme, you still have to participate in it. So it's not nearly as honest as the Ponzi scheme, maybe that Bernie Madoff was perpetuating. Remember, I had the guest on the show who said that the only difference between a Ponzi scheme, and this was a former trustee of Social Security, that the only difference he could find between Social Security and a Ponzi scheme was that a Ponzi scheme involves fraud. Well, I had to correct him by saying that Social Security is pure fraud. In other words, there is no difference. So I like those comments. And he also mentioned that he thought that it was unconstitutional, which of course it is. I mean, Social Security is completely unconstitutional. But the point is that this article had mentioned that the idea that Social Security was unconstitutional was totally outside the mainstream. It was like a fringe idea. It's not fringe at all. In fact, when Social Security was first passed back in the 1930s, the First Circuit Court of Appeals in Boston declared Social Security unconstitutional. I mean, this wasn't a fringe court. This was the First Circuit Court of Appeals. And if you go back and you read the decision, they found it unconstitutional on so many different grounds. I mean, it wasn't like there was just one thing about it that violated the Constitution. There were numerous ways that the Social Security Act was unconstitutional, according to the First Circuit Court of Appeals. Now, that decision was reversed by the Cardozo-Roosevelt stacked Supreme Court. But what's really interesting, and if you go back, and I'm also mentioning this in the book that I'm working on now, on my chapter on Social Security, I'm putting a lot of these quotes in there so that they'll be there for people to see. But what was really interesting is that one of the many reasons that the Boston court, the appellate court, found Social Security unconstitutional was that it actually violated the general welfare provisions of the Constitution, in that the government was laying a tax on one group of people for the specific benefit of another group, meaning they were putting a tax on employers, but the money was specifically going to certain employees, and they said that was a violation of the general welfare provision, and the appellate court agreed. Now, here's the interesting thing. The government, in trying to persuade the appellate court that Social Security was constitutional, the government argued that the Social Security tax and the Social Security benefit provisions were completely unrelated. The government said that Social Security taxes were taxes, just like any other tax, just like the income tax or the tobacco tax, that they were just a tax, that there was no specific purpose whatsoever behind the tax, that the money was paid without any strings into the Treasury to be used for anything that it wanted, that there was no earmarking. And then the government told the court that Social Security benefits were like welfare payments, that they weren't earmarked, that nobody was entitled to them, that the government could change them or eliminate them, whatever they wanted. It was just a welfare program. That's what the government told the court. Now, the Second Circuit Court at least had the integrity not to believe the government, because after all, the government was out in public assuring everybody that it was an insurance plan, that there was a trust fund. The government was saying the exact opposite in public, what it was telling the Second Circuit in private. And so the Second Circuit said, look, government, we don't care what you're saying. You're lying. And so they struck it out. When the Supreme Court heard it, the government came with the same BS as they told the appellate court, and what the Supreme Court said is, and all this is there, you can read the opinion, but the Supreme Court said, well, the petitioner is saying that the Social Security taxes are earmarked for Social Security benefits. The government is saying that that's not the case. The government is saying that there is no earmarking at all, they're totally unrelated. And instead of ruling on it, the court said, you know what? We're not sure because we have two people saying opposite things, so we're going to leave the question open. That's what the Supreme Court said. They refused to rule. So the only way that they were able to allow Social Security to be constitutional was by saying that we don't know who to believe. Well, obviously, based on what's happened since, if you ask anybody in Congress today, can Social Security taxes be used for whatever they want, or are they earmarked for Social Security? Everybody is going to say, oh, they're specially there to meet Social Security benefits, which is an admission that the Second Circuit Court of Appeals was right, and the Supreme Court should have thrown out Social Security a long time ago. It is not a fringe idea. It is very mainstream. The only people who don't understand that Social Security is unconstitutional are the people who don't know the case law or who don't understand the Constitution, because based on what the Supreme Court has already said, said, and based on what the Second Circuit has said, the whole thing is unconstitutional. And I'm starting to like Rick Perry a little more after reading some of this stuff, but apparently now he's trying to backpedal away from these prior comments, which of course means that any respect I might have been gaining is going out the window. But of course, I still support Ron Paul. And number two, I just read too Gary Johnson, who's my second favorite, who I also think is a great candidate. I just noticed that Gary Johnson is actually polling higher now on some national polls than Pawlenty, than Newt Gingrich. Yet the next debate that is scheduled to take place in September is including Gingrich and Pawlenty, but excluding Gary Johnson. Now, Gary Johnson has been excluded from every debate except the first one that they had down in North Carolina. But how can you exclude Gary Johnson when he's polling higher? Now, apparently the rules state for this debate that in order to be included, you have to have polled at 4% at some point. And so Gingrich and Pawlenty months ago were able to meet that criteria of 4%, but they don't meet it anymore. But meanwhile, Gary Johnson's support is actually increasing despite the fact that he has been excluded from all these debates. And even though he is polling higher than these other candidates today, he's being excluded, which is, it is so, the whole thing is crazy. And of course, they don't have room on the podium for one more guy. I mean, give me a break, right? I mean, one of the guys dropped out not too long ago, so they can't have him in the debate. Anyway, let me go and take a couple of calls. Next up is Mike calling from Denver, Colorado.
Hey, I wanted to talk about the solution to the unemployment problem. First, I want to say that Peter, you were right about the economy and the damages of printing money. You're also right how to protect yourself with gold and silver. But when you go in front of Congress, I want you to talk about this solution. And this solution was Alexander Hamilton started, and the U.S. kept going for 170 years. And while using this solution, we had no income tax at all. But, if you go to Congress, tell them this. But let me frame this up really quick.
Well, you know what?
Here.
I tell you what, frame it up after the break, because I think if you start trying now, you're going to get cut off. So we will continue with this question after the break. So stick around, everybody. You're listening to the Peter Schiff Show here on SchiffRadio.com.
The Peter Schiff Show.
Now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
The Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff at SchiffRadio.com. And I think we were talking to Mike about employment. Yes, Mike, go ahead.
Yeah, basically, we go to Congress, talk to them. If not, I will meet you in Washington and I will talk with you. But there's one solution, and in 2 years, we can bring back 30 million jobs back.
Okay,
to
but is this Mike or Matt?
Mike.
Okay, go ahead.
Yeah, basically, frame it real quick. There's currently 24 million people unemployed in the U.S. There's 47 million people on food stamps. There's 65 million people on Social Security. That's 135 million people not working. There's only 139 million people working. Half the people in the U.S. aren't working. Now,
some of the people who are collecting food stamps are, in fact, working, so they're not all unemployed. And some of the people collecting Social Security are working. There are people that work and get Social Security, but go ahead.
That's correct. Fortune magazine just reported, though, in the last month's article, 42% of the people in the U.S. are not working.
No.
That's a huge number. Now, I worked at Compaq Computer Company 25 years ago, and the company made a ton of cash. And our president vowed to us he would never go to China. Now, Michael Dell started importing Chinese-made computers and started selling them out of his dorm room for $700. My 286 was $1,000. He was $700. And in 5 years, he put Compaq out of business, a Fortune 100 company. Not because of regulation, not because of taxes, because the consumer wants something cheaper.
But the consumer's supposed to want something cheaper.
Correct.
But the question is, why is it that we can't produce stuff cheaper here? Why is it that they produce it cheaper in other countries? Because remember, we used to be the cheapest manufacturer of products in the world, despite the fact that we used to pay higher wages than we do today. In real terms, I made the point that 100 years ago or 90 years ago, Henry Ford paid his workers, adjusted for inflation, more money than Ford workers are earning today. Without labor unions, without the minimum wage, automobile workers were paid more 90 years ago than they are today, yet we produce the cheapest cars. So the question is, why is it that the low-cost stuff is made out of the country, and that's because of taxes? That's because of regulation.
There's two reasons. I'll give you both answers right now. The first answer is, number one is tariffs. Tariffs protect American goods. Right now, take Germany, for instance. Germany, on average, is paying $35 an hour to their workers. Germany has a $300 billion trade surplus. Germany taxes their citizens at 58%, and yet they have like a 5% unemployment rate and that $300 billion trade surplus because 98% of what they buy in Germany is made in Germany.
Right, but it's not because of tariffs, and it's not because their taxes are high. And again, Germans are actually paying less taxes than the U.S. when you net the whole thing out. But their government is not borrowing, is not running a huge deficit. Their government isn't borrowing as much money as ours, and they have a much higher savings rate in Germany. They have more capital. You know, they are doing damage, but they're not doing as much damage as we are. But what you're saying is, if we just impose tariffs and dramatically increase prices here in America, it's not going to create jobs. Because remember, if Americans are going to have to pay a lot more money for the things that they buy, they don't have the money. So they're just not going to buy the stuff.
Peter, I'm going to give you a case study right now. 2 years ago, the Taijing Pipe Company sold about $10 billion of pipes to the U.S. 2 years ago, Congress put a 100% tariff on seamless pipes. The sales of the Taijing Pipe Company went to zero. It went from billions to zero. And basically, the Taijing Pipe Company goes, wow, we lost $10 billion in sales. So they went to Corpus Christi, Texas, and they spent $2.6 billion and built the world's largest seamless pipe plant in the world, and they're currently hiring thousands of Americans to build seamless pipes made by Americans in Texas.
But here's the
all
point.
It took, Peter,
right.
All it took was a tariff, and they're selling there's a ton of
But you have
pipes now being
to.
sold.
But you have to now look at their customers who are now paying more for seamless pipes than they otherwise would have paid. So how many people are they not hiring? How many jobs get destroyed because now the users of those pipes are not making a product as efficiently as they would have had they been able to buy the pipes cheaper? You always have to go down the line and look at the added effects.
And when you go down the line, when you run the math on it, matter of fact, there was an article that came out by Harvard about 2 weeks ago that talked about Walmart, and it said if Walmart paid a living wage
They do pay a living wage. They pay, and the thing is, if Walmart decided to pay everybody more money, they just have to raise the prices that everybody pays for their products. And the people that would be hurt the most would be people that work at Walmart, those type of people, because the poor people get hurt the most when you have to raise prices.
Peter, that's not true. The study they said is that Walmart would not raise their prices at all. But if they paid pretty much twice what they're paying now,
of course they raise their prices.
No, because the profit is there. Corporations in the U.S.
Let me ask you, what do you do for a living?
I work at Frito-Lay.
You work at Frito-Lay. Why don't you quit and start your own business? And why don't you pay people a living wage and see how well you do?
Well, and it depends.
But why don't you? If you care so much about creating jobs, why don't you quit your job? Because right now you're taking a job. Why don't you create some jobs? Why don't you quit your job and then open up a business and pay people, $20 or $30 or $40 an hour to do things that other people are paying minimum wage? Go then do it. What's stopping you? Go do it.
What is stopping me is international. If I try to, let's say I make computers, I can't compete with Michael Dell.
Well, then don't make computers. Open up a restaurant. Do something.
He is paying 50 cents an hour to
But
China.
then don't get into a computer business. Just go open up in a business and overpay your workers and see how long you stay in business.
Peter, it's not about computers. It's Nike shoes.
But don't make Nike shoes. You think it's something that you can do.
Peter, when I walked in Walmart the other day,
wait a minute. You're telling me that it's impossible? There are people in this country that are employing people, aren't they?
I didn't say impossible.
Then go start a business and hire somebody, and then overpay them and see how long you stay in business.
I didn't say overpay them.
Well, you want Walmart to give everybody a pay raise.
The only reason Walmart can underpay its employees right now.
How are they underpaying them? Is Walmart forcing their employees to take a job?
No, but
and how are they underpaying them?
Here's
from what I know, when Walmart has a job opening, when they open up a new store, they get thousands and thousands of applicants.
Yeah, exactly.
It's probably indicative of the fact that maybe they're overpaying. If they get so many applicants for every job, maybe they're paying too much.
Peter, you're missing the point here. The point is, in the U.S., it's basic economics 101, supply and demand. If there's 135 million people, or 42% of the population, not working, if somebody throws out, we're paying $4 an hour, you're going to have 1 million people swarm for $4 an hour.
You know what by having all these people unemployed, you know what that tells you? That wages are too high. If you want to create jobs, you got to bring wages down, not bring wages up. If you have a bunch of people that nobody will hire, it's because it's too expensive to hire them. That's why nobody wants to hire them. And if you try to make it more expensive, then even fewer people are going to be hired.
We at Compact, we paid $21 an hour. We paid free medical, free down. We gave everybody the full boat, and we still became a Fortune 100 company in 5 years. We were the fastest growing Fortune 100 company in the history of the world before Apple.
But what were those people doing? I mean, I'm sure you didn't pay. I'm sure you didn't pay the people who were answering the phones $21 an hour. You didn't pay the people who were sweeping up sweeping up the floors. You didn't pay them $21 an hour. I'm sure Compact was paying that money to people that had skills.
Peter, you have to realize the amount of money Michael Dell makes, the amount of money that the Compact Computer makes, the amount of money that Mobile, GE, they're making. When a stockbroker can make $1 billion in profits, it's not about how much. The profits are record profits, Peter. And what they've done is by saying they're pitting me versus somebody in China, and they're saying, look, if you don't.
But that's always been the case. American workers have always been in competition with workers in other countries. The difference was in the past, American workers had better capital because we had lower taxes, we had fewer regulations, so American workers were more productive than foreign workers. So even though we could get paid more, we were still able to produce cheaper products. The problem today is American workers are not more productive because our businesses are loaded down with red tape, bureaucracy, regulations, and we don't have the savings, so we don't have the capital, so we've destroyed the productivity of the American worker. And the way to revive our economy is not to insulate ourselves with protective tariffs. All that's going to do is ingrain this lack of productivity permanently. We need free, open competition, but what we need is to get the government out of the way so that market forces can operate and we can regain the competitive edge that we lost. If we simply say, hey, we can't compete, so let's keep out foreign competition, that's just going to make our industries even less competitive. Even the companies that we have today that are able to export are going to have a harder time doing that if we force them to overpay for all the components that they need in their products. But anyway, it's been a good call. I want to break so I can get a few more people in. Anyway, let me go to Matt calling from Florida. Matt, you're on. Is Matt there? Can you hear me? Oh, I don't know. Let me skip Matt and go to Ben in Long Island. Ben, are you there?
Oh, hey, Peter. I'm just wondering, yesterday you were talking about the period between 1870 and 1920, which was the Industrial Revolution.
Well, actually, that was the Gilded Age. I think the Industrial Revolution technically took place earlier in that. I think maybe between 1820 and maybe I think the technical Industrial Revolution took place earlier in the 19th century. But I think a lot of the real benefits of the Industrial Revolution, we saw more of the benefits happen, I think, in that period of time.
Yeah, because I'm just wondering, what was the policies that made it possible for that time between 1870 and 1920?
Well, it was capitalism. It was laissez-faire. I mean, we had remember back in that
I'm
period,
talking about specific things that they did because
the specific thing they did was do nothing.
Before that,
Well, obviously we had to invent the stuff. I mean, we had a lot of inventions that didn't exist. It was the automation process. It was that's what happened. I mean, but what the reason that you had that growth in America versus in Europe or other parts of the world. The reason that the Industrial Revolution flourished, or that we were able to make so much of the benefits of that revolution in this country, was because of an absence of government. We had less government than any other country in the world. We had fewer regulations. We had lower taxes. We had more freedom. We had sound money. We were on a gold standard. And because we had the least government, we had the most freedom. And because we had the most freedom, our people were the most productive, there was the most ingenuity, we were the hardest working, and we had immigrants coming in from all around the world seeking out freedom in this country, and their labor helped us, and all of that produced that massive economic growth that was referred to as that gilded period. And my point, I brought it up, is because you had Dick Morris say, if we go back to a gold standard, we can't have any economic growth. It's limited by the gold we pulled out of the ground. And I used that to show that wasn't the case. Anyway, hey, don't go away. We got another segment coming up on the Peter Schiff Show here at SchiffRadio.com.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
Welcome back, everybody. This is Peter Schiff here at SchiffRadio.com. We're at the final segment. That 2 hours seem to fly by. The stock market has turned around quite a bit. When we started the show, the Dow was off better than 100 points. It's now up about 15 points. That rally has taken some of the luster off of the gold and silver market. Gold is now, silver is up under 50 cents. It was up over $1 10 minutes ago. Gold is holding on to its gains a little bit better. It's up about $36 now, maybe $7 off the high it was at 10, 15 minutes ago. The gold stocks, the Huey is still just under 600, so it's hanging in there. It's maybe about 2 points off its high. Oil has been very strong on the day. We're almost at 89 cents a barrel, up better than $1.50. Of course, we've still got a lot of time left to go in the trading day, but these gold stocks are looking very strong. I wanted to play a quick clip here. Yesterday they unveiled a brand new, a statue of Martin Luther King in Washington, D.C. His daughter, Bernice King, was there to make a speech with the unveiling. And the interesting is she made a major gaffe. And my point is not necessarily to jump on her. I mean, anybody can make a mistake, but it is a doozy anyway. But the point is the media. Because you'd think about the hypocrisy in the media. If this was some Tea Party gathering and somebody had said something as made a mistake as large as this, it would be all over the news. I mean, it'd be the only thing you'd hear about. These crazy Tea Partiers. Imagine if it was like some kind of Republican candidate or something. But when it's somebody who's got some status in the liberal world who makes a mistake, it's the media basically it approaches it with kid gloves. It doesn't even want to say anything about it. But anyway, let's play it real quick. It's cut number 7.
But as I close with the recognition that Daddy is standing, Lincoln is seated. Lincoln remembered for signing the Declaration of Independence. Daddy being remembered as standing up for truth and standing up for justice and standing up for righteousness and standing up for peace and standing up for freedom. Daddy is now standing on the National Mall in our nation's capital.
Okay, so first of all, the obvious gaffe there. Lincoln is not remembered for signing the Declaration of Independence. He wasn't even born when the Declaration of Independence was signed. Maybe if she had, the gaffe had to do with George Washington, because at least he was around then, although he didn't sign the document. But the other thing that might bother people about the quote, too, is the inference that because Lincoln is seated and Martin Luther King is standing, that he is a grander figure in American history than was Lincoln. Because after all, Lincoln is sitting down, yet Martin Luther King is standing. And he was obviously a great American, but I don't know that you want to make that comparison in just that way. And I'm sure, again, had this been a conservative Tea Party type person, either one of those statements would be all over the news as a glaring example of either ignorance or arrogance. But of course, when Miss King makes the statement, I guess all is forgiven because she, I suppose, is liberal. Anyway, also I wanted to give a little sneak peek about tomorrow's guest who's going to be on the show. Hold on one second. Where's the my guest tomorrow is the CEO of Gibson Guitar. His name is Henry Jesuits or Jesuitsky. I'm not sure how to pronounce it, but he's got a really interesting story because apparently the government is basically, the U.S. Justice Department is shutting down his company, an American company, employing American workers manufacturing guitars here in America. But apparently the problem is they don't like the wood that he's using. He's using wood imported from India. Now, apparently, I guess there's some acoustic reason why to make guitars you need this wood from India. Otherwise, they would obviously buy wood from a closer source. But apparently the labor unions out in Oregon are objecting to the use of Indian wood. And so the Justice Department is now doing their bidding and basically shutting down this company or threatening to throw people in jail for both making or distributing these Gibson guitars because they are using Indian wood. And apparently they're trying to enforce, the U.S. Justice Department is claiming that Gibson guitar is violating Indian law. Now, of course, India isn't complaining that they're violating any laws, but why is the U.S. Justice Department enforcing Indian law anyway? I mean, what do we care about Indian law? This is America. And if you've got an American corporation manufacturing products, selling products, employing Americans, why should the Justice Department care if we're breaking Indian law, especially if India doesn't seem to care if we're breaking this so-called Indian law? I've got a lot of sound. I was trying to figure out which clip was the best one to play because I've got too many clips to play, but apparently I'm not getting any indication of which one to go with. So maybe we'll just take a call. I'll try to figure out if I want to play because this is a press conference that he gave. We're actually going to have the guy on the show tomorrow. So to actually hear the man himself and hear the story, it's obviously an incredible story. And of course, if Washington is trying to figure out how to create jobs, they're having committees about how to create jobs. Well, one way is to stop destroying jobs. Stop sending the Justice Department out there in the country to put people out of business who are employing Americans. Anyway, I already got an indication, so I'll play a little clip. Let me play cut number 2.
The Lacey Act is very recent. That law was passed, approximately 2 years ago. So it's not like that law's been around for a long, long time. But according to this law, if you bought a guitar from us and you resell it, you are criminally liable. You, not us. Everyone who touches the product, the store owner who sells that guitar, is criminally liable. And it doesn't matter whether he knew or not there was some issue. It's a pretty dangerous precedent in my opinion.
I don't know. It's hard to actually hear some of this sound because I can hear a lot of background noise. But anyway, it'll be a lot clearer tomorrow when we bring the man himself on the show to discuss his dealings with the Justice Department, and I believe, which is the criminal actions on the part of the government, not on the part of this guitar manufacturer, and the government in bed with the labor unions who are apparently trying to force him to use Oregon wood rather than Indian wood. Obviously, if Oregon wood suits his purpose, he would certainly be using it. But again, it is the government putting its nose where it doesn't belong and using it to undermine employment in this country. Anyway, hey, we're out of time. I apologize to a few people who we left on hold. Hey, call again tomorrow. We have a great show coming up, so make sure and tune in. You've been listening to the Peter Schiff Show on SchiffRadio.com, the gold standard in talk radio. Bye.
The Peter Schiff Show.
There are a million reasons Staples makes going back to school easy. Today's reason? A free $100 Visa prepaid card via Easy Rebate when you buy a student laptop and show a current school ID. This incredible offer means your student can start school with a powerful new Windows laptop. It also means you won't have to hear,
"You're giving me your old laptop, Mom? It's so big."
At Staples, you'll find 4 powerful and portable student laptops from HP, Dell, and Toshiba. Even the amazing Samsung